Look at Sofi. That stock is up more than 14% after beating on the top and bottom lines in Q4. Earnings guidance for the year ahead coming in well above consensus, helping send shares up about 50% since the start of the year. With us now on our first on CNBC interview, Sofi CEO Anthony Noto. Anthony, wow. Okay, so why is the market surprised at this? What led to these results? And then tell us a bit about personal loan originations, which are a bit lower than some might have expected.
Thank you, John, for having me on. We reported our 7th consecutive quarter of record revenue with growth of 58% year over year, which is an acceleration in year-over-year growth compared to what we did in the third quarter at about 51% growth. We combined that with really strong profitability, $70 million of EBITDA. That was up 55% compared to Q3. And we finished the year with a really strong quarter in what was an exceptional year overall. We finished the year with about $1.5 billion of revenue, up 50% year over year. Our member base grew very meaningfully throughout the year, ending at 5.2 million members, also up 50%. And we had really strong product growth from cross-buying. So the strategy is really coming together, and our national bank charter has really put a wind at our back. It's giving us the ability to offer a really high interest rate on checking and savings. We're offering 3.75% interest on savings and 2.5% on checking. And we're doing that in a way that's very unique. There's no fees, free overdraft protection, full function on your phone to be able to pay or spend when you want, where you want. And that product's helping fuel our ability to drive deposits. And then we're using those deposits to fund our loans at about 190 basis points lower cost of funding than if we borrowed money from banks to lend to our customers. So right. The overall strategy is working. We have the flywheel going really well.
So in the quarter, I became a lot more familiar with the Sofi app and those interest rates. Not an endorsement, but I'm watching the interest rates like a lot of consumers are. Tell me to what degree the customer acquisition has changed as the economy has shifted, particularly over the past 7-8 months. How much are people coming to you for the APY on deposits versus loans or any of the other perhaps more speculative things that they might have been coming for before?
Yeah, the checking and savings product, John, you hit the nail on the head. It's the tip of the sword. It's our ability to differentiate our product the most significantly versus other competitors that aren't able to offer that same interest rate. Because of the collection of businesses that we have and that diverse portfolio, we're in 4 different lending products in home loans, personal loans, refinance student loans, and college loans. In addition to that, we have a credit card as well as an invest product. In addition to that, we offer many other services. And so we want to use the checking and savings account as that product that really builds trust and reliability with our members. And then once they need a second product, because they do trust us and they've gotten a very unique offering, they choose us for their second product. And that's when the flywheel really starts to move. So the checking and savings account and that high APY is definitely very attractive to them, but the functionality and ease of use and trust are also important elements that wrap it all together.
Hey, Anthony, good morning. It's Deirdre. We just showed our audience a screen of different savings APYs at different banks. Yours is up there, as you said, plus 3%. Marcus from Goldman Sachs, there he goes, at 3.3%. But we've been talking over the last few weeks, certainly about how much money that division is losing. At Goldman, it's also, under scrutiny by regulators. What are you doing differently that's going to allow you guys to become GAAP profitable in the fourth quarter of this year, right?
Yeah, well, the first thing I'd say is we are a one-stop shop for all your financial services needs right on your app. The other companies that you mentioned only have 1 or 2 point solutions. And in fact, the specific product that you mentioned is just a savings account. Our account is a checking account and savings account. And typically, you can't use those accounts interactively the way you can with us. We do not limit the number of transactions that you do from your savings account at Sofi. We want you to make money on your money, not pay us money, and not restrict your money. And we're willing to bet on the value proposition that we have and the trusted experience that we deliver, that people will do all their primary banking with us. The second big element that's unique to us is that we do have 4 different loans, as well as brokerage accounts, the ability to buy robo accounts and fractional shares, as well as insurance. And so we're finding multiple touch points to build the business and build the number of members we have, and that's translating into more products.
Right, you guys have lots and lots of products. I know that's what you've always said when you come on here, but when we look at those top line numbers, lending business, that continues to make up the majority of revenue and contribution profit. So how might you respond to those that argue SoFi is primarily a personal lender and may not deserve a fintech valuation?
What I'd say is they have to look at the three business segments. So we do have lending today, which is about 60% of our business. We also have the technology platform. That is a huge differentiator. It allows us to not only leverage end-to-end technology and payment processing and core technology, but it also allows us to generate revenue. And so our technology platform, Galileo and Technisys, are generating meaningful revenue and profits. And then our third segment, which consists of credit cards, brokerage, as well as checking and savings, insurance, and a couple of other products, is also growing really rapidly. We did about $64 million in the quarter, and that growth rate is only going to continue. We expect that to be as big, if not bigger, than our tech platform in 2023. And so we have three really scaled businesses that are all working at the same time. The fact that we had our 7th consecutive quarter record revenue reflects record revenue in all three segments this quarter.
Okay, Anthony, what's happening with investing and crypto for SoFi, and give us your thoughts on what's happened with Genesis and Gemini and this whole thing around promising an interest rate based on crypto accounts that ultimately they were unable to deliver.
Sure. First thing I'd say is crypto investing, or investing in crypto assets, digital currencies, is a very, very risky asset. And investors need to be educated and understand those risks and make sure it's appropriate for where they are financially. A warning that we give at SoFi before anyone buys any cryptocurrency, and every time they do, is that it's a risky asset and they can lose all of their money. And the reason why we say that is because it is an unproven asset, and there are also market participants that are unproven, as we've seen more recently. And so investors need to be very cautious about investing, and if they choose to take that risk, we would recommend that it's a very small percentage of what they do. I think giving yields on an asset that's not proven is highly risky, and something that we do not offer to our members, nor would we consider doing it until it was a proven asset. So I think the mistakes that you see in the marketplace are people taking unnecessary risk and too much risk relative to safeguarding their shareholder value. And just to be clear, it's a very small offering at SoFi. We've talked about that in the past. We do not actually take cryptocurrency or move cryptocurrency. We just facilitate a third-party platform supporting our members that want to buy it, and they do the transactions and they custody the assets.
Well, people reconsidering all of those assets in real time. Anthony Noto, CEO of SoFi, thank you.
Thank you.
And after the break, is a TikTok ban imminent? Why the CEO agreed to testify in front of Congress. Plus, watch Carvana start